This is Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
Some big news in financial services. We talked about Apple and Goldman Sachs credit card partnership might be coming to an end. Apple recently sending a term sheet to the financial giant that would be a first step towards severing the contract. This is according to a person familiar with the matter. Apple, you know this, right? Among those, but this is one of the big players looking to disrupt financial services by offering its own high-yield savings account, product financing, a credit card, Apple Cash, and more. Yep, they know. Fintech. Disruption. There's a lot out there.
Yeah, well, someone else who's looking to disrupt financial services is Britt, founder and CEO of the privately held fintech Chime. Chime offers consumers checking accounts with no monthly fees. They've got savings accounts, products such as secured credit card that helps users build credit, and more. Chime says it has, quote, millions of members. And back in 2021, Carol, when Chime last raised money, it was valued at $25 billion.
Well, Chris joins us on Zoom from San Francisco. The company officially, too, launching the Chime Scholars Foundation, which we will get to in a moment. Chris, great to have you here with Tim and myself. Hope you're well. Tell us a little bit about the environment for your business, because it sounds like you guys have a very front row seat, if you will, to what's going on with the consumer right now.
Yeah, sure. Thanks for having me, and thrilled to announce the foundation. But in terms of the consumer trends that we're seeing, yeah, we serve millions of consumers, and I think the relationship that we have with our members is that they use Chime as their primary bank account and primary way that they do their day-to-day spending. So we actually do, see a lot of, we do have a front row seat to transaction activity, balances. I'd say we're starting to see a little bit of a weakening among the consumer that we see. We've seen balances decline slightly, probably down about 5% year over year. But at the same time, we're still seeing spending that's been really solid. It's up, 6-7% year over year. And again, our members mostly use Chime for their everyday sort of non-discretionary purchases. So in many ways, we're insulated from, ups and downs of the economy, because people use our cards for their everyday, grocery transactions and daily habits that, really help fuel our business.
Chris, are you seeing their spending patterns change, like what they're actually spending money on this year versus what they were spending money on in 2020, 2021, and 2022? Has that mix changed?
Oh, for sure. I mean, we're seeing more and more just a normalization of the economy and where spend is happening. So you're seeing things like rideshare at Uber and Lyft is up pretty significantly year over year. You're seeing more spending for, concerts and restaurants and those sorts of activities. And it's a well needed, sort of normalization of, just getting back to post COVID transaction activity. And that's been really healthy. At the same time, we still see unemployment rates that are really, really low. So, we serve consumers that make up to about $100,000 is generally the sweet spot that we serve. And those consumers can generally get jobs, and they sign up for Chime accounts, they get direct deposit, and they use us for everyday transactions. So, I wouldn't say our business is counter-cyclical, but it's very resilient to, be able to withstand, ups and downs of the economy.
Chris, because people use this for direct deposit for their salaries, for their paychecks, are you seeing people lose jobs? Are you seeing them jump around more, jump around less? What can your data tell us about job hopping and the strength of the economy for those Chime users?
Well, look, as you move down the income spectrum, there certainly is more turnover and more change in how and where people work and receive direct deposits. So we always see a little bit more turnover, than you might if the consumers that you served made hundreds of thousands of dollars a year. But like I said, it's still very healthy. People can, there's jobs out there for people. They're readily available, and a lot of people have, multiple sources of income. That trend hasn't. That's been pretty consistent, I would say. Where people might have a little bit of gig work for a side hustle, but still, the primary wages come from a corporation or, office job that they have. people are, particularly in our portfolio of members that we serve, they're just amazing people that are resilient and can go out and hustle and get the work and get the job that they need to help their families and move their financial lives forward.
Hey, Chris, for those who might not be familiar, though, with Chime, just remind us how it all kind of works and what is the business of Chime and how you guys make money.
So Chime exists to unite everyday people to help unlock their financial progress. And we do that by starting with offering a core checking account, a deposit account that, Chime is not a bank. We partner with primarily 2 FDIC insured banks that hold the deposits. What we're really good at is creating, really easy to use, intuitive, low fee services and a end-to-end technology stack and sort of operate all aspects of the consumer interaction primarily through an app. So we don't, have the cost burden of a heavy, sort of branch infrastructure. We're able to operate at a very low cost structure. And then what we do is we deliver to these members that we serve fee-free checking accounts. So there's no fee associated with, having the core underlying deposit account. We give them access to their paycheck a few days early. We give them free overdraft services and other services to help them with liquidity. And we also help them with credit building. So that combination of services has really resonated with millions of people that rely on us.
But you make money by getting a fee on every transaction that they do off that account. Is that correct?
We have a few sources of income, but that is a very large part of our revenue is the interchange that is earned when consumers use their Chime cards for their everyday purchases. And what we like about that model is that it's very aligned with the consumer, right? We only monetize when they're engaged with us and using the card for everyday transactions. We've been very careful to design the business to not profit from their misfortune, which is oftentimes the way, larger institutions make money off of this segment. So yes, we earn money off interchange, and it's really allowed us to unlock free banking for millions of people who otherwise would be paying huge amounts of monthly fees, overdraft fees, you name it.
Let's talk about interchange fees. The Fed is proposing lower caps on those interchange fees. This is your business. How concerned are you about this? Does that mean that you'll make less money if the Fed does indeed go through with that proposal?
Well, we're, of course, well aware of the conversations happening in Washington around interchange. None of the proposals being contemplated would have any direct impact on Chime or the banks that we partner with. So, we're monitoring it. It's sort of an age-old discussion and debate. But at the end of the day, interchange has been a huge positive for millions of people that suffer from, paying outrageous levels of overdraft fees and monthly fees. And, like I said, that this interchange-based business model has really been tremendously helpful for us to be able to disrupt this category. Look at the changes that have happened in overdrafts.
That's exactly where I wanted to go, Chris. Because you guys were early to do this. So many banks now though offer free online banking, no ATM fees, early direct deposits, no overdraft fees, something that you guys have been doing for years. How do you differentiate from those traditional banks that are now offering those services that you offer?
Well, I think it's great that all those changes have happened. It's awesome for our country. It's awesome for people, people in every state across the country. What do? We have to keep innovating and push the envelope on the next service that's actually consumer friendly and actually help our members, move their financial lives ahead for themselves and for their families. So we certainly have more copycat, companies, startup types, but also it's in many ways it's flattering that these big institutions now do advertising on getting paid early and free overdraft. Although I'll note, I would say the overdrafts are fee structure are friendlier, but there's still some gotchas. They may give you a little bit of extra grace period, but a lot of these institutions still aren't shy about being pretty aggressive on the fee schedule.
We are talking with the founder and CEO of Chime on Zoom from San Francisco. Chris Britt is still with us. Hey, Chris, just a few rapid business questions to wrap up the business part of our interview. In 3 and 60 seconds, I want to ask you, because we want to get to your foundation. We want to talk a little bit about your backstory. First of all, are you guys profitable?
We have very attractive, highly profitable unit economics. We are not yet profitable, but that's a decision we've made as a private company.
Okay. Will you be soon? Or that's not a goal? That's not part of it?
We're not optimizing for profitability right now. We may actually be profitable in Q1, but it's not.
Okay.
It's not a stated goal. We raised a large round of financing in 21, so we don't need to raise money again. But we're feeling like there's an opportunity right now to continue to pursue our vision, which is to be the number one market share company in terms of primary account relationships among consumers that make up to $100,000 a year. And we think that's within reach for us over the next few years.
Which tells you a lot about the folks that you are reaching out to and helping. Growth in users and how sticky. If somebody's on the platform, do they stay with you?
Oh, yeah. I think that's, if you were to, in a nutshell, describe what differentiates Chime relative to other consumer fintech companies, is just that. It's the engagement. It's the primary account relationship that we enjoy with millions of consumers. So the majority of people that bank through the Chime app are using us as their primary everyday transaction relationship and sort of way to manage their money. So it results in very high engagement, lots of transaction volume, and for the business, extremely high ARPU relationships with our members, but in a way that's very aligned with them.
All right. And growth in users, can you give us any kind of year to year over growth?
Oh, yeah. I mean, we're growing at a rate of, next year we'll grow well above 30%. Wow. So I think in an environment where a lot of companies are, MAUs are declining or flatlining a bit, we are a real bright spot in that we're, growing at a nice clip right now.
And just quickly, since you just did another funding round, any plans to go public anytime soon? I know this has been asked certainly in the past.
Well, we did a funding round in 2021. It's been a few years, but now. But look, we intend to be an independent, large public company. We've certainly, we've raised a lot of money, and so we want to make sure that we can do that for our amazing investors and also for all the Chimers that work here to support our members every day. So it's not something that we have planned on in the short term, but we're certainly about as IPO ready as a company could be, and we certainly have the scale to be able to be a nice public company. I think we're going to wait and see how the economy plays out and the stock market plays out over the course of the first half of next year and figure out plans from there.
Hey, Chris, want to talk about the big news this week coming from Chime, the company announcing the Chime Scholars Foundation. I actually, we've talked many times in the past. I didn't know your backstory. Give us just, a quick 30 seconds on your backstory and how that got you to launch a company like Chime, and then we'll get into the foundation.
Yeah, you asked about public offerings. Well, today is the public offering of Chime Scholars Foundation. I'm so thrilled to announce it. And I appreciate you asking about my backstory. I actually wrote a little blog post about it too on the Chime website. But man, I was so lucky growing up. I grew up in Mount Vernon, New York, which is a sort of working class, town. Lived in an apartment building, and when my parents got divorced, my mom had to go to work, and my dad wasn't around all the time. And by the grace of God, I had a neighbor downstairs. His name was Joe, and Joe used to look out for me. He made sure that I got to practice, did my homework, had some dinner, and we had so much fun. He became like a father figure, a grandfather, and really my best friend. And why that's relevant to today's news is that, my mom, when the schools got pretty tough in my town, my mom decided to try to apply to a private school, and I got in, but it was really difficult to pay for it. And Joe agreed to, I had a scholarship, but still it was tough. And Joe agreed to pay for it. Wow. And then later in life, when I got into college, neither of my parents had graduated from college. And I got into a great college, Tulane University. I got a scholarship there too, but again, it was tough to make it all work. And Joe agreed to pay for the remaining balance for me. And I just, that story, which probably sounds incredibly weird or lucky, it really was. And I think when I think about
very Capri-esque.
Yeah, I mean, look, I think in ways that Chime could give back in some way, I talked about our mission around unlocking financial progress. Higher education is the most powerful engine to allow for economic mobility. So it's very much brand aligned for us is what can we do to help people gain more access to education? Obviously, there's lots of colleges and community colleges and different ways to get post-secondary education. But too often people are, saddled with tremendous amounts of debt, and they start out life like with a really difficult starting place because, they may be sort of feel forced to go to a 4-year college. They've got a ton of debt, and the first, part of their professional lives are very difficult. So that's what we've tried to solve for with this nonprofit that we've started, Chime Scholars Foundation. I think, we're thrilled to announce it today. We've already been in pilot for about a year. We've offered scholarships to over 300 students. And one of the things that's really unique is that it's not just for 4-year university. It's also for community colleges. It's for vocational training. And, we're really optimizing for people that have the grit and the grind and people that we feel a high degree of confidence are going to see it through and get their degrees and move their financial lives for themselves and their family forward. And I think maybe
Right.
in addition to announcing the 300 students, the other announcement that I just wanted to highlight is
Right.
Chime and our board of directors and investors have committed to allocate 1% of the equity of our company into this foundation to
Wow.
ensure that we can fund it for many years to come.
Well, and I love it as you write, as we look at this release, it's like everyday kids like you who have responsibilities at home, work hard, hustle, yearn for something more. It's not necessarily everybody who had a 4.0 in terms of who you are providing this for or possibly offering up. Thank you so much. Chris Britt, happy holidays. Have a good holiday season. Founder and Chief Executive Officer of Chime, right here on Bloomberg.